in Web 2, the single most profitable thing a bank can do is credit. And second, like the biggest user acquisition lever is also credit.
Looking at traditional finance, the base inputs of yield are discrepancies in time preference. So people are willing to pay interest to get money now.
Yeah.
There's transfer of risk.
For any kind of like fintech that has to do something with lending, their end goal is to attract actually retail capital as much as possible because it's always the cheapest. If you look at like Klarna's cost of funding, it's 3%.
How will crypto look in 4 years, 5 years, 6 years down the road? Everybody was talking about it. Primarily, it's going to be a back-end solution.
If you are to choose between like a credit card and buy now pay later, like then you should choose buy now pay later because like it's usually like there's like just usually less interest.
GM, and welcome back to episode 57 of the Odyssey Pod. Today we are joined by Mikhail from Yumi Finance. So you guys are working on bringing buy now pay later onto the blockchain. So essentially aiming to dethrone Klarna, if I'm understanding it correctly.
Essentially, yes, like we're looking to bring like better and more global credit to everyone.
Do you want to start by giving the audience a little bit of insight into your background, what you did before Yumi, and how the whole idea of building Yumi came about?
Yeah, sure. So like I've started working originally like in fintech, in payments, in neobanks, and so on. Like spent for around like 4 years there, mostly like in product and tech. And then it's actually quite a big story because I've moved to Korea like in 2021, and like I've met my current co-founder in Seoul in 2021, and he like introduced me to like crypto. He showed me how DeFi works and stuff, and then with him we built a dev shop together. So usually like we're helping different like companies grow and scale. And like in 2025, I mean, even like in 2024, we started noticing this bigger trend of like payment coming on the blockchain. We like saw how a lot of the major companies like were doing some experiments with stable coins and so on. And I think it was even like a couple of years ago, it was pretty easy to predict that like most of the payments are going to live on the blockchain now. And like I think 2025 was probably kind of the boom of like of the stable coins, payments, and neobanks, so on and so forth. And we saw that now kind of the problem of debit payment on the blockchain is almost solved. You have like a lot of great like spending apps, you have the crypto cards, you have like Stripe integrating crypto as well. So you can like spend your crypto pretty much natively now. But we still saw how the issue of credit and crypto is like a very big white space. And then for us, it was like pretty obvious that if we wouldn't capture this white space, then someone else would. And that's how we started. And yeah, like at the same time, I was just noticing like more and more how there's a lot of people who are not even like underbanked, like unbanked, but they still cannot get access to credit. So for example, my co-founder who's based in Korea now, like, you know, he has a job, he has like a stable income, he has everything, like he has like, you know, a company, etc. But he has a good like credit score, but he's still unable to get credit and create just because like he's not local. And I saw this kind of mismatch with like a lot of friends of mine who are like living abroad and so on and so forth. And then I saw how there is an even bigger niche of people who are like actually underbanked, like unbanked in a lot of those emerging markets. And then I saw that crypto is actually, I think, the perfect fit for fixing this kind of issue.
So how do you think it came to be that Klarna is very popular, especially in first world countries, where it's, I would assume, mostly used to just finance consumer and like consumerism purchase, in a or longer term. And how do you use Yumi to rather appeal to the emerging markets, and how do you plan to reach them?
Well, yeah, I think like Klarna is right now like really popular like in markets like US, Europe, so on. But then if you look at the EMs, then there's like a lot of buy now pay later solutions there, because if anything, I think the demand for credit is higher in emerging markets than in like developed markets, because in like developed countries you have like higher salaries, higher standards of living. But then in a lot of the EMs, credit can actually be a means of financial inclusion for people. So like Klarna is of course right now only live in like US, Europe, maybe some like places in Asia, but it still like uses some very traditional kind of sources to underwrite people based on. But then in EMs, like where you have like less people who have banks and so on, you have newer apps who use stuff like your phone bill, your geo, your like apps to be able to issue like a credit line. And actually the like neobanks and the fintechs who are tackling credit for the like underbanked and like those huge markets, they have seen more success than Klarna has. For example, if you take Klarna, they have like a market cap of like 10 billion. But then if you take someone like Nubank, which is a bank in Brazil, I think, they're like very, very popular there. And their like biggest like feature and their biggest income part is credit. And they're like valued at 80 billion because they're like tackling such a bigger market where the need for credit is also so much higher.
So would you say that on-chain BNPL and what you're building with Yumi is somewhat of a twist on microloans and like microcredits given in emerging markets, or where exactly do you guys differ?
Yeah, I would say that our business model is slightly different from Klarna because we're more of a B2B2C business. Since we saw that like in crypto, there is a lot of like great teams building like in neobanks and payments and savings, but at the same time, if you draw like any kind of parallel between Web 2 and Web 3, then you see that in Web 2, the single most profitable thing a bank can do is credit, and second, like the biggest user acquisition lever is also credit. So if you look at new entrants in Brazilian and Philippines and Mexico, then all of those neobanks, they're trying to win the audience by doing credit. And then we saw that crypto is like winning by giving people like better yield, better cashback, less FX fees, and so on. But credit is still like a very big missing part of how crypto can win like as an industry.
Mm.
And at the same time, a lot of teams in crypto, they're lean to the point that it would be quite hard for them to like build the underwriting, the financing, the servicing in house fully. So we, came in with a credit as a service pitch. And so we work with like a lot of crypto cards and neobanks and payment gateways. And we allow them to like issue either like buy now pay later or regular credit style loans to people. We kind of tap into this existing like ecosystem of on-chain tools and just like make them I guess better for the end user. Because if like someone, let's say, spends in EtherFi, if he like, saves in EtherFi as well, then it's very natural for them to also borrow money in EtherFi. Of course, for crypto, it's kind of like a weird story because like no one really does uncollateralized loans in like within the crypto audience, but like retail people are very used to credit in the normal sense of uncollateralized unsecured lending.
Let's dive a little deeper into how crypto makes the whole business model cheaper and like improve
Yeah.
on certain verticals, like where I guess like most people in the audience, including me, are not familiar in detail with how the user flow and money flow of something like Klarna works and where the cost factors come to be. And in comparison, where does Yumi and like through crypto technology enable to make these things cheaper, faster, and more accessible?
Yeah, so I'm like very glad you asked. I think there is kind of two main points here. First is like how the business model is better because like technically like if your business model is better, like it doesn't mean that it's more accessible to the end user. So like Klarna can have a huge fee and then it would have a better business model, but it wouldn't make Klarna more accessible to the merchant or to the end user. So on the business model front, if you look at like a lot of the like buy now pay later companies like Klarna or like at a firm, then you see that um, a big part of like Klarna's costs, like Klarna charges a 6% fee on the merchant, and then a big part of the 6% fee is something they call processing costs, which is which is like the fee that cards take on Klarna. So like when I want to buy something with Klarna, as a customer, like I pay with my liquidity with my card to Klarna, and then like Klarna funds the whole amount to the merchant, and then like in 2 weeks, in 4 weeks, like in 6 weeks, I repay Klarna from my card as well. And then like what happens is that the card, the issuing bank, the acquiring bank, they all take a fee on Klarna itself, and Klarna has to pay this like 2% fee like to Visa, to the banks, just because the person is paying Klarna back with a credit card. And how on-chain can make this better is that, as I said, you have this like whole ecosystem of like on-chain tools which like allow you to, to spend, to save, to invest, to receive like your salary, to receive your remittance, and so on. And if someone like is already spending and saving on chain, then it's very natural for them to also spend on chain. And this will allow us to have like fully crypto to crypto payments, avoiding this middleman in the face of Visa and banks that charges a 2% fee on Klarna.
Mm.
And so we can have like both lower merchant fees and higher profit margins at the very same time because of this.
So would you say that as of now, it is more geared towards people who are already familiar using crypto, or do you try to abstract away the crypto and blockchain components as much as possible?
Yeah, I think the familiarity with like using crypto isn't too necessary here, because if you like see even a lot of the major cards now, like DeFi and so on, they're all like now trying to go to the like retail web to like even Web0 users, and they're trying to capture those folks instead. Because if like we just compete like for the same kind of eco bubble of crypto natives, then I think it's going to be very like inefficient to trying to go after them. So we very much try to like abstract the crypto aspect of this and just like show it as a purely a better credit to the users. And we see that like a lot of our partners, they have from the cards end, they have a lot of their like demand come from non crypto users. Like
I
even now.
agree with that a lot. I think that over the course of these years, we have seen most adoption taking place outside of the established and industry internal crypto bubble. Like all
Yeah.
the adoption coming from TradFi when it's more about institutional products, but also on the consumer side. And I think that is also significantly contributing to the bad sentiment that we've had in the industry for the pretty much entire year ever since January. Like there's nobody really eager to participate in all of these game theoretical games in DeFi anymore.
Yeah.
New
Yeah.
and like if crypto is able to improve your product, like you do not want to make it center of the whole thing. You just want to put it in the backend. Like there's no reason to use crypto as an end in of itself. It's a means to an end. It's like just if you're a restaurant with an online menu, you don't brand yourself an internet company.
Exactly. Exactly. Yeah.
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 That's like a very, very big point, actually. Yeah.
I think that's still, I mean, basically in 2021, 2022, when you were talking with people about, okay, how will crypto look in 4 years, 5 years, 6 years down the road, everybody was talking about, oh, well, primarily it's going to be a back end solution. Like that's the logical conclusion. Now
Mm-hmm.
we basically have achieved everything we wished for a few years ago, but the sentiment is as bad as it was during the FTX collapse because now we are faced with this existential crisis. Okay, the technology is being used, but the industry itself, for the sake of the industry, is not really growing. It's like the value is accruing within businesses that are smart enough and fast enough to use it and to integrate it,
Yeah. Yeah. Yeah.
not accruing to like DeFi yield farmers anymore. So I think,
Basically, yeah, like the old playbook doesn't work anymore. Like you can just, buy like a token and expect it to go up like 10x if you build like a Uni V3 fork on a new blockchain. And that like was working like really nicely maybe like back in like 2022 days. But now it's just not the case. Like now you gotta actually like try and like think how to build an actual business. And like, funnily enough, like for us, we have like some of our advisors from all of those people. Like it's very, it's like, it's like kind of very hard for me to like talk to those folks because they like all, like push us like towards making like an actual business. And it sounds so weird, but like in crypto, it's just I feel like a lot of people are not used to thinking in this framework of how do I build an actual business.
yeah,
And it was the same like for me because when I was talking to a lot of people who like had businesses in like Web2, like who had like buy now pay later companies, like insurance companies, like their whole like mindset was very different from what it is in crypto because I feel like in crypto with like how easy it was to raise money, people were trying to build kind of like a spaceships from day zero, and then like by the time you would build this spaceship, like no one would need to to fly to the moon because like you'd have something else. And that's like I think what happened with like a lot of chains now is that they spend like years building some spaceship that no one like wants to fly in. And instead, like I'm now trying like being pushed to adopt a more lean mindset, but like you first want to build like a plane or like even, like a car, a skateboard, like a whatever, and then just like make it like ride, try that it works, and then like get some revenue, get some customers, and then like build on and on and on. I think now you need to like really think about what is an MVP I can make like in, let's say, 3 months that would have like users and revenue.
Mm.
Like you cannot just like, put IP on chain like for 5 years anymore.
Yeah. I think there's an issue of just, I don't know if that's the right framing, but it feels like there are too many products built in crypto right now, where too many people try to get to the same outcome by just taking a slightly different starting point. For example, if you look at all of these L1s that are meant to be DeFi native or like to be
Yeah.
chain for all of finance, like there are at least 10 iterations of trying to achieve that. Like with the spaceship analogy, like they all, when they talk about it, they all talk about how in 5 years they will build the spaceship, but right now they are building like a wheelchair or a hot air balloon at best. And like between a hot air balloon and a space shuttle, like there are 100 years of innovation
Yeah.
between. Of course, like we're living in an exponential world, and these time differences are decreasing. But I think that to just build something with such an insanely high aim and directly trying to build the space shuttle before being able to like build a Concorde before that, it just doesn't work because like there's no basis. And I think for most of these products, they are technically visionary and sophisticated, whatever, but they
Yeah.
do not solve an actual problem.
That's such a big like point that it's so hard to like answer in crypto, because like you're not just used to answering this question. Like you just like, okay, like we build, we put like IPO in chain, but okay, like what problem does it solve? Like what if this, what is the end user? Like like what is, like show me like a person who would pay for this. And
Yeah.
like like even when I was kind of starting out like Yumi and talking to some of the more like Web 2, like Web 0 even folks, I was like feeling so uncomfortable being asked this question, because like I like couldn't even like answer it, because like, it's just like not something you're used to thinking when you like work in crypto. As bad as it might sound, that's kind of true.
I agree. I think that also makes it easier to build something with B2B integrations rather than
Mm,
B2C. Because I think the B2C landscape of people who are really eager to participate in DeFi, to trade coins, etc., that has been served to the largest extent over the past years. And in order to get new consumers onboarded, you need to offer them something that improves their user experience by a couple of multiples, not a couple of
yeah.
percent. Whereas in B2B, it is much easier to convince somebody of like switching to you as like a payments provider or whatever you're building if you're
Hmm.
able to promise them maybe 20% more speed or 20% less cost. So you have an entirely different scale of like the improvement you have to achieve,
Yeah.
contrast to having to sell a very abstract and almost absurd type of vision.
Yeah, I would say like this like works, but only like in certain niches. Like, you can still go BDC like in crypto and win, but only within, I would say, very like specific and certain niches. Because if you look at finance, like in the end, most of the stuff in finance is kind of like on the back end, and then you just win by like giving a better UX. And so it like really becomes a Web 2 game, like because like you can just have a better like UX without having crypto. And yeah, like I think like a good like niche for like BDC app is kind of yield or savings apps. But again, you still have two different ways to go about yield and savings. You can develop a consumer facing app and you can go direct to customer, or you can like partner with a certain bank and then you can offer this bank to embed your vaults into their app, and then maybe you can slowly kind of try and take the users back from the bank to your own app. Because in the end, I think it's healthy to own your users, because if like banks see this crypto stuff getting big enough, then they can just copy it, I guess, but potentially. So I think BTC, something crypto will come, but like quite a bit later.
I agree. Also, in terms of the traditional players, if you look at Klarna, if you look at PayPal, I mean, Klarna, I think just a week or a week and a half ago,
Yeah. I saw it.
Klarna USD, then PayPal has had PayPal USD around, particularly on Solana, I think for around a year now. You wrote a long form article of like how Yumi, Klarna, Tempo, how that all like fits together. Maybe want to walk through this a little bit or like give us the TLDR of it?
Sure, I can like give like a brief primer, I guess. So basically, Klarna USD fixed like one of Klarna's lowest costs. Like I was talking about how Klarna has a 2% processing fee, and the thing is that the 90% of this fee is because the way that the user pays Klarna with a credit card, and then maybe like 10% of this fee is like Swift fees, bank wire fees, and Klarna USD only kind of tackled the issue of Klarna paying out merchants, which already was very efficient because they can like batch transfers, they can like use wire transfers in the US, they can use like Swift, which is like, it's kind of expensive, but it's also not too expensive, especially if you batch. And so, yeah, just like Klarna fixed this. And I think kind of biggest outcome is that it's very hard for a TradFi to come on chain to like have a marginally better business model unless this company builds with stablecoins from the ground up. Because for Klarna, since they have most of their like customers in in Europe and the US, people there are like very much used to paying with cards and so on. So for them, it would be extremely difficult to have someone like paying from bank or from crypto and so on. If they would build like kind of with stables in mind, then they would optimize for like those stablecoin to stablecoin flows, and they would be able to not only shave off like 0.1% of their costs, but shave off like 2% of their like 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 30% of their costs basically, instead of like 0.101. And that's I think why crypto and like new crypto startups have a very like tangible and significant edge against even some of the huge companies in the Web2 space.
Can you walk us through the user flow of Yumi? Maybe if you have a mock-up or can screen share some images, like
Yeah, sure.
to better reason how the payment flows. And also what would be interesting to talk about after that is how you do the underwriting. Because if there's no KYC, if there's no legal underlying contract, I mean, in crypto, we've had that issue for years now that if you want to do credit in crypto, you have to do it over collateralized because there are no legal securities.
Or you have to like, know who the person is. Yeah.
Yeah. I think there are a few interesting players on the under collateralized credit side. So there Free Jane, there is Wildcat that has been around for quite some time.
Yeah.
And they're obviously more institutional geared and like
Mhm.
lending to VC funds or market makers.
Yeah, sure. So let me share my screen first, and then like I will go through like how Yumi works and how Yumi underwrites the person as well. So like here, this is a like short part of our flow. It's actually this simple. So for the buy now pay later SDK, like you select Yumi as an option on checkout flow on a certain merchant. Then you can link your then we would still need to know kind of who you are, because like as you said in crypto, like there is it's you like either do over collateralized or you do the KYC. So we have chosen to do the latter. So I think, and like a very kind of big point here is that for like crypto natives, this can be an issue. But if you look at the retail space, like if you look at the like at the like billions of people like we're trying to onboard on chain, they don't really care about like linking their bank, linking their car, linking their passport, because like for them it's like super natural to like do the stuff in the traditional finance apps. And so yeah, like here we allow you to link your bank, your crypto card, your CX, your wallet, etc. Like essentially any kind of data source that will give us your full name, your address, and some kind of payment history, payment behavior. So like here you can like a US bank, a European bank, a like Asian bank, um, on the card end, you can link EtherFi, Cost, whatever else. Like on the CX, you can also link whatever else with zero knowledge, and then you can link your wallet.
So are you
And
trying
once,
to derive like an credit score that is combining on-chain behavior and like off-chain behavior?
yeah, so like you're free to link anything you want. Of course, if you say have only $1 on your EtherFi card and you choose to link this, then we'll show you like a screen prompting for more data, because we need like, to get like, to know like you can actually pay back the loan. But then if you are a very like avid user of EtherFi and you have your like whole salary there, like all of your spendings there, then we will be able to underwrite you based on card alone. Um, and then yeah, you can choose to pay in 4, choose to pay over 3 months, pay with bank, pay with crypto, and that's it. So that's the flow on the buy now pay later side. And then we also have like we support like card issuance. So well, not we like we work with like partners. So using our SDK, any crypto card or neobank can go live with credit in a matter of weeks. So this is just a simple like UX we have put together as well. So any partner of ours can issue a credit card backed by our underwriting and loans. Like here, we can get your KYC data and your transaction history from the card itself and give you some kind of limit based on this data alone. But then if you want a higher limit, you can link your bank, your exchange, your wallet, and so on and so forth. And that's it. And then you get like an actual credit card, which has never been done in crypto before.
Hmm. Are you on the note of credit cards? Are you trying to establish some sort of loyalty programs or points programs there? I think that's kind of an interesting vertical to explore, just to increase the user retention. I think EtherFi is already doing some of that, sort of trying to be,
Yeah.
say, American Express of crypto.
That's, I guess, kind of the benefit of going B2B2C, because if any partner of ours like runs a points program, runs a cashback program, then if like they issue the credit card using us, if you pay with the credit card, you also get all of the same benefits as paying with the debit card.
Nice. So where does the money actually come from to pre-finance these things? Is there like, do you have to gap any like, you know, vacuum in terms of time delay? Like, does the merchant receive the full amount upfront and it's only the
Yes.
consumer who pays in installments? And how does all of that work?
So we currently have sourced like some private capital for like those loans. Then we plan to open up pools in DeFi a bit later. So like anyone could become a lender for Yumi essentially. And then like yeah, we gap these time difference. So we pay the merchant upfront the whole sum minus the fee, and the person pays back in installments to us.
So what would be an like expected yield from that
Hmm.
for
Yeah.
the lender? And also like how is it structured in terms of risks? Is there any junior senior tranche, or how does the whole like supply of cap?
Yeah. That's a very good question actually. So for now we're just like planning to go very simple, have two tranches, but here we're just planning to have a senior tranche with like almost zero risk, and then like an equity tranche which is gonna be Yumi's own money to be kind of like the first capital, like the first loss capital for those loans. And then I think as you get more and more mature, we'll like probably like structure it like in like like senior, mezzanine, and junior tranches, I would say.
Yeah, I I
But
like how more and more of DeFi is moving towards a tranche model
yeah,
because
but we also kind of want to make this, I think, as like easy to understand for like retail lenders as possible, because then if you have, if you have like some complex model, then like any, I guess, like financially savvy person wouldn't lend money to something that he doesn't understand how it works. So I think for any kind of like fintech that has to do something with lending, their end goal is to attract actually retail capital as much as possible, because it's always the cheapest. If you look at like Klarna's cost of funding, it's 3%. It's like it's insane, because like usually you have BTB loans like around like 14-15%. Like so like if I'm a BNPL company, I usually source my capital like a firm, all of those newer buy now pay laters. They like their cost of capital is like around 8 to like 15%, and Klarna has 3. Why? Because Klarna has a banking license. So Klarna accepts deposits from retail, and then it lends them out. So, and I mean, that's kind of like also, I guess, has good and bad sides, but basically a institutional investor is looking for something around, like 10 to like 15% of interest like on his capital, while someone from retail and might be like only looking for like 5 or 6. And that's also like our end goal is to open up pools to the public, make it like simple to and understandable to deposit money, and then enjoy a funding cost less than like a firm or any other buy now pay later play.
Mm. How do you view the whole under-collateralized credit landscape in crypto right now? Because there are a few players out there, but to be frank, most of them, like if you think about Cap Money, Free Jane, Wildcat Fi, in theory, they can all get to a level where they are as highly levered as, let's say, a business bank or like any fintech with a banking license. But right now, they are still
Yeah.
mostly interacting with people who are very well capitalized. These loans do not have an insane loan to value, or like in the case of Cap Money, there's just a very high multiple of restake capital that is
Hmm.
kind of backing the entire thing. So we are not yet at a stage where we are dealing with like truly under collateralized loans and very high leverage. So where do you think would Yumi fit into that in comparison? And also like what kind of volumes and outstanding loans are you mostly thinking about?
Okay. So I think like on this end, like Wildcat and Cap Money like have very, very different business models to what is Yumi. I think 3G is kind of the closest thing to compare here. But at the same time, I think that 3G is much more DeFi native than we are. Like we are more kind of consumer and retail focused than 3G is. For us, we would be looking at about like 200 to 1K dollar average check size on the purchase, and then we can be looking at, I think, like about like even let's say like 2 million in volume per quarter on buy now pay later like would give us like more than 60K in revenue, which I think is like really nice, like especially like an early startup. So like a couple of millions in volume per month would be like really great for the beginning, just because of like how I think like wildly profitable buy now pay later and credit really is.
From the user or consumer side, to what extent is Yumi going to be cheaper or more attractive than using Klarna or any of the other providers?
Well, like we're not trying to compete with like Klarna essentially, because Klarna is like live in the US, they're very like integrated. So then like for the end user, like the UX is going to be the same as like with Klarna. So like most of the difference is going to be like on the merchant end, because merchants are going to be able to pay like less fees to us than they would be paying to Klarna. And then I think the benefit like for the user, like in those developed markets is going to be that they are already spending like if someone is already like spending on chain and has like a crypto card or something like this, then uh they it's like very natural, like easier for them to like to borrow in the same ecosystem as well. uh so that's kind of one of the benefits. And then I think like in a lot of the, if we talk about credit, then we would be usually able to give like a lower interest rate to a borrower like in a lot of the EMs. For example, if like someone is a client of like one of our partner cards and Brazil, let's say, then like a lot of banks in Brazil are very data poor. And if you have like stocks, if you have crypto holdings, a bank wouldn't be able to see it. And then so this bank would like underwrite you based on your salary, based on your like taxes, based on your rent, and so on and so forth. And then for us, we'd have the same data plus like it's because of like this on-chain ecosystem, we can like tap into way more data with ZKT TLS and zero knowledge. So you can like view your like salary, your taxes, your rent, plus like your stocks, your crypto, because you can, a lot of the crypto neobanks now allow you to like, to invest, spend, and shop like all within the same app. So then we can just get way more data about you, and we can underwrite you more accurately and like offer you a less interest rate usually.
So what does your current growth and go-to-market strategy look like? Is it more like, are you trying to become a visible brand directly to consumers in these emerging markets, or are you trying to go via merchants and they just offer it to consumers, or like how does that entire process?
Yeah. So right now, like mostly partnered with merchants and crypto cards. So we have like some day one partners like in Brazil and the US and so on. And then like also on the merchant end, we're trying to partner with payment gateways because like for us going directly kind of to each merchant one by one, it's very lengthy usually. And like, the sales cycle is quite long. So like instead we just want to first partner with payment gateways, which have access to like, thousands of merchants, and like through them get access to like all of this volume and to all of those merchants.
Nice. So what's the launch timeline? Is there already an MVP live? Do you have any adoption metrics you can already talk about, or what does the roadmap
Mhm.
look like for the coming months?
Yeah, we are looking to launch in I think around January or in February, with our first couple of like day one launch partners, and then we're planning to go live with some of the bigger cards in Q1 or Q2 2026, and then just like I think scale from there. There's like a lot of the things like there's a lot of things we can do and a lot of partners we can get even in the web 2 space, like mobile wallets, QR code wallets, and so on. So but that's I think like a decision we'll make like around like Q1 2026, like on the next plans.
Very nice. Maybe to transition the conversation a little bit into the macro landscape. So we are recording this just a week after Thanksgiving and Black Friday, and Black Friday is obviously like the Super Bowl of consumer spending. And how do you personally view buy now, pay later fitting into the broader consumer trends, and also how does it affect the macro landscape right now?
Mm-hmm. Well, I would say that especially like in the like Thanksgiving and the discounts, the Black Friday, people are usually looking like as to buy now pay later for like buying something they wouldn't be able to afford to kind of look in this discount that is there during the Black Friday. And I think like it can be viewed like that buy now pay later is like a very kind of predatory thing that makes you spend more than you can afford, and that's it's bad for the society. But at the same time, I think if people need like to afford, if they need to buy something that they cannot afford, then I think buy now pay later is always a better option than a credit card. And then like like any kind of like micro lending, because if you see, for example, in Brazil, there's like triple digits interest rates on cards, which is insane. And I think it's not a question of like making those people not get credit. It's just like a question of making people like get credit on better terms. And that's I think something we can like help with. That's something we can fix.
Yeah, I just pulled up some statistics following Black Friday. So Walter Bloomberg, the Delta One accounts, it reports that Klarna reported a 45% Black Friday growth
Wow.
in the US, and it's mostly for footwear and home goods, tech, beauty,
Yeah.
etc. So it seems, funnily enough, the Baccarat Rouge 540 perfume ranked first in beauty. I think I
Interesting.
don't know the current retail prices, but it's pretty expensive, and it's just like it is a very stereotypical thing
Yeah.
to
I mean,
finance.
it's a nice gift, I guess. I guess
Yeah.
it's a nice gift. So.
Then Adam Cochran, who's pretty notoriously known on crypto Twitter, like one of people love him, people hate him. I think he's kind of an obnoxious character, but sometimes he posts stuff worth reading. He reported that so there's a 9.1% increase in spending compared to last year. Prices are on average 7% higher. 11% increase in buy now, pay later usage in general. And yeah, Klarna seems to have outperformed that significantly by being up 45% in volume. Um, 84% of all purchases were financed by credit cards, and 67% of these 84% are not expected to be paid back within the first month. So if you're adding this up, that's how this number of 95% of Black Friday shopping
Yeah.
being financed
And
comes to be, which I think is a little bit sensational
like
because I mean
see, like
everybody
yeah,
uses
yeah.
credit cards, but yeah, I
Yeah,
mean
like
in the US it's obviously a big issue, but I think yes, that is a sign of like a weakening consumer economy, and like the whole consumerism
mhm.
economy in the US is degenerate. But I mean that has been a trend
I
for
was like,
years.
the thing here like is that if you are to choose between like a credit card and buy now pay later, like then you should choose buy now pay later because like it's usually like there's like just usually less interest. So yeah, like a lot of the cards have on average like higher interest than like even some long term buy now pay later plans. Yeah, so I think
So
it's
sometimes when I'm
probably better.
buying something online, I see that there's a buy now, pay later like promotion offered where you have zero interest. So, I mean, just by using expected value, you
Mhm.
don't earn any additional interest on it, but you have like certain credit delinquency rates. That should be a negative EV game for most of the providers. So, is that essentially just like an onboarding promotion campaign, or what is the afterthought of that?
Yeah, well, I think most of the buy now pay letters they like count the delinquency rates like as part of their like fee and as part of their margin. So usually, if you like look at the data behind Klarna's defaults, then it shows that their underwriting is better than like in a lot of banks because they like look at a lot of digital signals which a bank can't look at, and the whole model is different because banks usually give you like higher ticket loans, and then Klarna is like looking at your even like mouse movements on the screen to see if you actually need to make the purchase, because if you're like hesitant then like you might move like your mouse more and so on.
Mm.
So then usually for like I think the merchant doesn't care either way because like the merchant with a card, like with a credit card with Klarna, they get the whole amount up front. But then if for like Klarna versus credit card, the like defaults will on average be much lower with Klarna than with a credit card because like your card doesn't see what are you buying with this. I mean, it sees like the item, but it doesn't see like how are you behaving before buying this item. And then Klarna, they see much more signals about you, like about this purchase, so they can make a way more informed decision about whether to give or to not give you this buy now pay later plan.
Are you like for crypto products, or if you're offering this as like an extension, are you able to also like track mouse movements and like all of these things that probably most people are not aware that are being tracked?
Yeah, well, I think it like infringes on someone's privacy. Like it's only tracks your like movement on the checkout page. Like it wouldn't like I don't see like you like outside of this like of this exact page, um, and so on. But then I think if it allows you to buy something with zero interest instead of you buying having to pay like 30% interest for the purchase, you would probably be down to have your mouse movements tracked. Like.
Do you personally have a concern that the growth of Yumi is correlated strongly to kind of the market sentiment and market cycle? Like, do you
In
personally
crypto.
have any proactive bet you're taking on like dollar devaluation to continue to fuel consumer behavior? On that note, also like if you're interacting with emerging markets, are people to choose currencies other than the US dollar? Are they integrating their local currencies, or like how do you hedge any resulting FX risks stemming
Mhm.
from that?
Yeah. Well, so currently we give loans like mostly in US dollars. I think this might change in the future. But the same, like we're like right now we're super early, so we want to keep things very simple and just to give loans in dollars. And then like the yeah, so that's pretty much it. And then like on the trend side, I don't think that there's any kind of correlation between crypto prices and payments and crypto usage because you see like Bitcoin going down, but then you see like almost like on the same day, news of like some new Web2 company launching their own stable coin and so on. So I think payments is very much a market agnostic trend that's gonna continue kind of going up because I think it's very obvious that if Klarna wouldn't go on chain, then a firm would, then someone else would. And I think on chain payments is one of those few use cases where crypto can actually bring like real tangible improvements in value. So it's like very natural that if a Web2 player wouldn't capture, then like someone would win them because they would be able to capture this. So I think this like movement on chain wouldn't stop. And that's like our kind of biggest bet that people will just continue moving on chain, spending on chain, saving on chain. And if you look at the data, that's already happening in a lot of the markets. So
I just asked Google Gemini for a few statistics on like current BNPL spending, etc.
Mhm.
And I think it agrees with a lot of the things you just said, because essentially one of the main conclusions was that the BNPL spending is moving more from like these discretionary online purchases that you mostly see on Black Friday over to day-to-day essentials like groceries, etc., or
that's, yeah.
which I would say is not necessarily a healthy development of an economy, especially if you're talking about first world economies. But on the other
Yeah.
hand, it makes the business model behind BNPL more resilient to market cycles, because people will always need groceries. And frankly, if we are in a recession, there's probably even a stronger incentive to use financing to sort of just get by. So yeah, I
Yeah,
think
like, it's like, I think there's like always the question, like if there is no buy now pay later, then like someone would, then people will have to use something else. So like even if buy now pay later would disappear like in an instant, then people would have to go back to like to the payday loans, like all of this stuff, but like the interest is like sky high. So I guess whatever the economic situation is, like I think if people are to spend money, then it's for the best if they are able. If people are to borrow money, so like then it's for the best if they're actually able to borrow it like with less interest and like potentially with less predatory terms as well.
yeah, for the supply side, because we're getting closer to hitting the hour, is there anything you can tease in terms of like potential points programs when people are willing to supply, or
No
yeah,
airdrop.
no, no,
Yeah, but okay, yeah, the views are gonna be like down now. But we are probably we might do points, but I think it's gonna like come like end of 2026 at the very least, because like for now we're gonna stay with private capital like for the big, like at least for the like Q1 and Q2 and Q3 probably as well. And then like once we'll want to get our funding cost a bit lower, like we'll switch to having like vaults in DeFi and so on. But for now, whether we have 10% cost of funding or 40 to 14%, it doesn't make this big of a difference. Like now we're like mostly focused on, getting the like initial traction, getting the initial like volumes, getting the defaults nice and low. And like we will be very like laser focused on this, I think, for the majority of the next year as well.
no. I think that's a good outlook, because I personally think that we have come to a stage where many projects issue a token actually too early in their whole life
Yeah.
cycle.
For us, like we'll also be able to give quite a good interest to our lenders, because again, like we'll be looking at around 14% interest in TradFi, like in private capital loans. So we can give around like at least 7 or 8 like unleveraged, safe, like senior tranche yield to retail, which is higher than like Athena, than Resolve, than Usual, than I think any like yield like all like than virtually any like on point subsidized yield you see. And I think that's like a very good deal.
Yeah, I think it's a very healthy development for crypto overall that we finally see these, let's say, more sustainable
Mhm.
yield sources being onboarded. Which, I mean, if you're looking at traditional finance, kind of the base inputs of yield are like discrepancies in time preference. So people are willing to
Mhm.
pay interest to get money now.
Yeah.
There's transfer of risk. And I think having buy now, pay later, which is kind of the epitome of like, yeah, arbitraging time preferences between different parties. And then stuff like Athena, where you are kind of more on the transfer of risk side. I think we're now
Yeah.
slowly but steadily addressing the issue that over the past, let's say, 12 to 18 months, most of the base inputs of yield in DeFi have been subsidized by speculation on points.
Yes.
While, I mean, all of us, including me, have enjoyed that time quite a bit, because it was kind of a creation of at least temporary value, pretty much out of nothing.
Mhm.
I've been concerned for quite some time now that there really is going to be a limit in people willing to jump from one points program to the next, because it's kind of, you have these very typical euthanasia roller coaster dynamics. We've seen
Yeah.
it in alt L1s and their incentive programs launching in late 2021 and then 2022. We've seen that in all the fork models where you had all of the ohm forks, where you had a lot of like curve forks, etc. It was just a continuous race downwards. In this cycle, I think the most egregious example for that is obviously meme coins, where, I mean, Pump.fun was a very, like, it unlocked a huge ton of activity, but it led to just a complete oversupply of different assets to bet on. And then with the points programs, we've seen a somewhat similar dynamic. I mean,
Yeah.
these
Yeah.
programs have been coming up across different sectors. It all started out with restaking, but if you compare the yields that you were able to achieve with size on stuff like Eigenlayer and the early seasons of EtherFi, Renzo, etc., you're just not able to repeat that anymore because it's been
Hmm.
getting more competitive. The initial valuations of these projects have been going down, and it's just like one points program after another, and people are
Yeah.
realizing more and more, well, basically the only way to be profitable in playing that game is by selling your tokens as fast as possible. And yeah, it's just kind of a continuous race to the bottom. And I think we urgently, as an industry, need to find more long lasting inputs of yield in order to
Yeah.
not
Yeah.
disappear as like a DeFi industry.
I would say like it has to be more of like what can actually create value, because if you look at Pump Fund, then it doesn't create much value, like in the sense of actual like tangible end user value. Like, I mean, of course, the gambling is like value because like fun. I guess fun is kind of it's value as well, but most of the people that go on Pump Fund to make money and then they end up losing. So like there is no like value transfer. Like there's no kind of win-win. It's like very much zero sum game. While if you talk about like credit, then it can be like a positive sum game because like someone gets their financial needs met and someone gets like their interest rate. So there is a creation of value going on there, and I think that's like those kind of processes are the easiest like extract some kind of natural like some natural yield from, as opposed to like pure DeFi based stuff. Like I think Eigenlayer, Renzo, EtherFi still like provide value because they secure the ecosystem, which is valuable. But then like stuff like Pumpfan or meme coins, then I think it's much more, it's much harder than like for newer projects as well. If like you once you farm something, you have to look at the perceived cost of points. And then if you see like tense delta neutral stablecoin on the market, then you would kind of, it would be like natural that it probably like didn't raise as much money. Like it wouldn't be able to like launch it at like high val, at a high like market cap. And now like points not worth as much either. And then because the whole delta neutral market is like more and more competitive, like also the yield itself, the base yield is going to be like more and more diluted, and you wouldn't be able to subsidize it with points either because the value then is still low. It's kind of like a dead end.
No, I agree. I mean, even the products that are innovating within the realm of DeFi, I think Infinify is a great example. We've had
Hmm.
Rob on sometime during summer. I use Infinify a lot personally. I really like the product, but the asymmetric yield that it generates is still dependent on kind of that speculative premia that other people are paying on the Pendle YT side for the
Yeah.
PTs to trade that high. And frankly, right now, most of the PTs are driven by point speculation. There's not
Hmm.
an organic or let's say sustain. I think sustainable is kind of a weird term. I discussed
Yeah.
that with Vlad from Tau Labs in one of the
Hmm.
past episode at length. Like we need to improve on that. Like we actually have to use stable coins to kind of tokenize real world inputs of yield. How sustainable these real world inputs are is another debate. I mean, when you want to discuss the entire, like, let's say, bullshit industrial complex and how long lasting most other sectors in the economy are. But I think the time preferences that you are having in the physical world versus in DeFi are already at such different orders of magnitude
Yes.
that it would help us tremendously as an industry to improve the long lastingness of most of the yield opportunities.
Yeah, I think so as well. I mean, it's like a very hard question. I think like whether like you should, like whether points are a good thing or a bad thing because you kind of like wanna. I think it's like a very good way to acquire new users, but then getting the token launch done correctly is such a hard issue. Like having a token like a token like I think if you look like for example at like Plasma and Plasma One like their new crypto card and new bank, then a very big advantage of Plasma like compared to stuff like Revolut or and with 26 or Monzo or whatever is that Plasma can use their own native token to give cashback and to subsidize like the usage of their neobank, but at the same time the dynamic might be like quite weird. Like people would just kind of farm them and then leave, and like I think the retention has to be good, but there has to be like someone on the like uh, demand side of XPL as well, and it's like a lot of moving parts to where I think there's like balance between incentivizing people, but also having like a good enough product to where they stay and having like a good enough demand for the token that they will be dumping into the market is like very very intricate, I think, because if you see like EtherFi and Scroll, then like of course EtherFi feels like really nicely giving cashback in Scroll, and like Scroll is also happy to see some like more activity in the ecosystem, but then like people wouldn't be buying like there's no like value accrual to Scroll because of EtherFi. I
Yeah.
mean like some transfers are maybe done on like Scroll, but like most people deposit from base, I think, like or like mainnet.
You could even argue the opposite, that it's just creating more sell pressure.
Yeah.
I cannot come up with any good reason to be bullish on any single L2 token. I think only exception where you can make a counter case is Mantle's MNT, because there you can kind of try to copy the Binance BNB playbook, and Mantle is also trying to move into the entire neobank space. So I think there you can make an argument
Mantle is
because
interesting.
like these centralized exchanges do have very different levers they can pull in order to accrue value back to their tokens. But if you're thinking about Arbitrum, Optimism, etc., Scroll, Starknet, which launched at I think a 20 billion FDV back then.
Yeah, like I don't want to like shit on like Scroll either, but like it's like the site should just it's like a very hard thing to balance. Like if they haven't achieved it, then it's fine because like it's very hard to achieve in the first place. Like I don't see many crypto protocols that have kind of solved this like issue of balancing incentives with the method token.
Yeah.
But I think if someone does, it's gonna be like a very big moat, I would say, on top compared to the Web 2 players.
100%. And I mean, the path it's been going down so far is not that it is a net negative to the space. I mean, most people, without the expectation of token incentives, without the expectation of an airdrop, they would have never even used Arbitrum. They would have never
I
even
mean,
used Optimism
yeah.
or Darknet or ZK Sync. So, like, back then, and I would say even now, having some sort of economic incentives is a necessary condition to even bootstrap usage and capital inflow into your chain. The unsolved problem where I think it's getting like very frustrating for most participants is everything that is happening the second after token generation event.
Yeah.
That is where we need to improve on as an industry. I think the premise of, okay, we are giving out incentives in order for people to use us, in order for people to deposit with us, that's a totally valid thing to do. I mean, Uber has done that.
Yeah.
The Web2 giants have been using VC capital to fuel
Yeah.
growth. And
Correct.
you're doing a very similar thing there with tokens. But the issue is that the way these tokens are designed, it's a suggestion token rather than giving any like underlying equity rights or whatever. And I think that really needs to be fixed.
But I mean, yeah, like I think like we need to give credit where it's due because like if you don't try to solve those issues, like you would never solve them. So I think like if like Scroll is, I can be like respected for trying to at least come up with some way to like work with like other protocols and give them incentives and try to bring some volume on the chain. Like I don't think it has been like extremely successful until now, but like if you don't try, then you will never come with a solution. So I think we just need kind of need to keep on trying different ways of like incentivizing people.
Yeah. I mean, it pays off to be an optimist in the industry.
Yeah.
Yeah. Since we're hitting the hour, is there any last outlook you'd like to give? Any points where people can find you on X, your website, or any top of points?
Yeah, I mean, you guys can always find me like on X by my tag, so that's always there. Write some stuff on payments, write some stuff on like on neobanks, on this kind of stuff. So if you're into this, can give read to some articles. Stay tuned for like Yumi will be announcing more partners in the next couple of months. Some exciting ones that are coming. We have like already announced two of our first partners, Money and Neobankless. So yeah, like stay tuned, I guess. And thank you so much, Max, for having me like on the podcast.
Thanks a lot for coming on. I'll stay tuned for all the launches that are coming up. I think that's like an interesting vertical where you could be one of the very early movers, and personally very bullish on everything that is concerning like neo banking, credit cards, etc. Because like we now have a lot of DeFi and crypto internal games we can play, but I think these are very good instruments to build that bridge and that connection over
Yeah,
the real world.
exactly.
So yeah, thanks a lot for coming on, and
Thank you so
I'll make
much.
sure to link everything in the podcast description.
Pleasure chatting. Thank you.